Global shipping operator DP World expects freight rates to fall by as much as 20% this year as demand from consumers begins to slow down. Joining me now on the set is Paul Zalai, the Director of the Freight and Trade Alliance. Paul, thanks so much for your time today. Is that your expectation too, that shipping rates will get cheaper and cheaper throughout this year?
Yeah, look, we're seeing it already. So the spot rate now, it's already low, but the spot rate that we've seen this week coming out of China, the rates are coming down significantly again. That will probably continue for a while. My personal view is I think we will see the rates bounce back a little bit in favour of the shipping lines. But overall, for those who are trading, it's good news with those record rates that we experienced the last few years, as you said, coming down significantly.
And at what point was shipping rates at their absolute peak? Was that at the height of the pandemic in 2020 or?
Yeah, probably into 2021. And that aligned with the congestion at major ports around the world and also the big demand. We didn't, at the start of the pandemic, we didn't really know what to expect, whether we were going to fall into a recession or global depression or what was going to happen. But with the stimulus thrown into the economies in the Western world, a lot of people were cashed up, had plenty of time on their hands and bought a lot of things. So it caught us all a bit off guard. With that, the huge demand and the freight rates went through the roof.
Yeah, we've just had a pretty big, looks like a big Christmas sales season and record sales at Black Friday in November. Are you expecting shipping demand to keep at this high level now, or is it really going to drop off after everyone's got their sales out of the way?
Well, you would imagine it would soften it a bit. But I think the other thing is too, a lot of importers have been stung by the big disruption to supply chains. For anyone who's waited for their furniture or goods or whatever would know the long delays that were in place over the last couple of years. So a lot of the importers now have moved away from a just-in-time situation to having a just-in-case inventory and a stockpile of goods here in Australia. And I think they'll continue to do that for a while. That's got other flow-on effects. Our local warehousing around the country is just about at capacity. And as you've reported in other stories as well, those goods are sitting on pallets and generating the pallet shortages that we've got around the country. So there are still, while the freight rates are coming down, and that's a good news story, there are other costs that are there and will continue.
Yeah, can we assume cheaper freight rates, cheaper costs in the supply chain, cheaper products on shelves for consumers?
I think it's a big assumption. And, you just got to look to the Productivity Commission that's recently put out their final report, or the federal government finally released it. They're showing that the trade sector has got inefficiencies and paying up to about another $600 million a year in unjustified costs. Our belief is that that's very conservative. Terminal access charges charged by the stevedores and empty container parks and other detention fees when there's delays in returning empty containers. We've estimated over the last 3 years, each year, that's cost the industry alone about $1 billion each, impacting everyone from major retailers to food suppliers and the like.
Yeah, last year there were a lot of disruptions at ports also due to industrial action. The big example was Svitzer, the tugboat operators. How do disruptions like this be avoided in the future?
It's a tough one. The Productivity Commission, again, that same report, they provided a whole range of extensive recommendations. That'll be one now for the federal government to consider in line with the industrial relations reforms that they're introducing in any case. One of the big things that we've been pushing for that is, we had the situation, as you said, with Svitzer last year and even Patrick stevedoring. During the Patrick dispute, we were looking to get involved and make an application to the Fair Work Commission to bring an end to the protected industrial action because of the economic harm that was being experienced. We had legal advice at the time that we would be unsuccessful as a representative body to do so, and it had to come from actual importers or exporters themselves who were reluctant to do so with fears of repercussions from unions. So one of the things we've pushed is that representative bodies can make those submissions, and the Productivity Commission has endorsed that recommendation. We're hopeful that we'll be able to have a bit more control and influence should there be major disruptions going forward.
Yeah, how do we boost competition in the shipping market? Because the Productivity Commission notes that there are major protections offered to shipping lines.
Yeah, well, look, the shipping lines are using larger vessels and they need the economies of scale. With that, they've got arrangements where where while they compete, they share those larger vessels and the space on them. And that's great. Those economies of scale, in theory, should bring savings and benefits to importers and exporters. So we haven't got a problem with that. What we have got a problem with, as did the Productivity Commission, is these extreme exemptions that are in the Competition and Consumer Act. We're suggesting, as does the Productivity Commission, that shipping lines should be able to collaborate to that effect, but they do so with authorisations and show net public benefit to the Australian economy, the same as any other sector of Australian commerce.